Thank you very much. I couldn't have done it better. Well, good afternoon, everybody. I know we're meeting after lunch, and the panel had already said to ask them a lot of tough questions so that we can keep the audience awake. But I think before we start, I want to thank on behalf of the entire panel here, Bhuvnesh, to you for really. I think he really deserves a big hand of applause, ladies and gentlemen, for putting a fabulous, fabulous show. And it's so heartwarming to be here, Bhuvnesh, and for creating a fantastic panel to discuss, the topic on hand. So the topic, I think it's quite interesting. It's nothing new. Owned, managed, or franchised, right? So these are the three prevalent models. Now, if you go back in, the evolution across many countries, many geographies, generally it starts with owned, then it becomes managed, and then eventually franchise comes into play. Most of the developed economies around the world, they have, when it comes to mid-scale, upscale economy, is predominantly led by franchise models. And in India, I think if you look at the history of hospitality in India, whether you look at IHCL, Oberoi's, or ITDC, the industry was born by pretty much hotel companies owning their assets. And it's probably in the 80s, that's when, the foreign brands came into the country and you had management contracts come into play. And in the last, I would say, decade or so, there is a lot of, as the owners mature, the markets mature, and the ambitions grow in India, there's more tilt towards franchise ownership. So it's, I think, where India is placed, it's a very interesting spot we are in. And I think we have a very interesting panel represented by ownerships, asset owners, and of course, the hotel operators. So Sonica, if you allow me, I will start with you. I think before we get into the questions, if you can just give us an overview of the MBD group, because I believe you've gone through a transformation recently as well. And I have to point out, I think MBD Group was probably one of the pioneers when they opened the Radisson in Noida more than 20 years ago, first franchise property in those times. So kudos to you for the vision of the MBD Group to get into that venture. So if you can share a little bit about MBD Group.
With pleasure, and good afternoon to everyone. Well, MBD Group is about 69 years old, and we are one of the largest education companies in India. But 20 years back, we took the quantum leap and we entered hospitality. And we were amongst the first two hotels to collaborate with Radisson. And I think from there, the journey started, and we've done exceptionally well for ourselves. Even amongst the Radisson 200 hotels, we are amongst the top 3 operating hotels in the country, despite being a franchisee. Well, it gave further confidence to us, and we expanded into Punjab. We've also expanded and brought in greenfield project acquisitions in Bangalore, Udaipur very lately, Ranthambore around the corner. And we were also, based on our kind of performance we exhibited, we became the joint venture partners for Steigenberger in India. So we're looking after the entire region for them, which gives us the opportunity to not only own assets, but to also expand through an asset-light mode, which is, as you said, through management contracts, franchise, as well as long lease contracts. And we also have our own organic brand, which is called the MBD Express, which is into the mid-market category. And this is in a nutshell about our India operations. Of course, we operate quite actively internationally as well through other asset classes like commercial office spaces and residences internationally. And that's about it. Yeah,
Great, thank you very much, Sonica. So with Steigenberger, are you the master franchisee for them to develop the Steigenberger brand in India?
We are a majority stakeholder in the joint venture that we hold with them, with Steigenberger. So we hold the 51% in the company, which is formulated for the Indian region. Yeah.
Fantastic.
But yes, we front foot in terms of the entire development for the country.
Great. Thank you very much. Jatin, next question is for you. So Sarovar, more than 30 years old, a mix of management contracts and franchise. Predominantly, the growth has been through through management contracts. Not a big hotel asset owner, probably 3 or 4 properties. You own out of the 140 so hotels. So if you want to tell me a little bit about Sarovar, the mix between franchise and managed.
Right. Thank you, Puneet, and good afternoon, everyone. 32 years precisely, and today we operate around 142 hotels, out of which 7 are international, between Africa and Nepal. We own 3 assets. Just opened 156 keys Sarovar Portico in Chennai, which is our own hotel. Between a mix, but before I get into the mix, you know, as you started by model of management, franchise, I think when the company we really formed, and we've got Mr. Bakai over here, and obviously late Mr. Madhok, the mid-market, we were probably one of the first companies who really, you know, kind of evolved the management contract model. When you look at the management contract model, it is a foreign concept which really came into India, and within mid-market there was nothing to say. And what is that model is really giving you the whole brand power. And we really didn't have that. So we put in a lot of efforts to evolve that model, to tape it to what Indian consumers or the Indian owners need. And today we're proud to say that 80% of our portfolio is management and 19% is franchise. And mind you, we still have more demand for management contracts than franchise, if you ask me. So I think that's where we are, more than 3 decades of legacy, and it's going really strong for us. Thank you.
That's quite interesting, Jatin. You're saying there's more demand for managed contracts than franchise.
Yes, absolutely. And I'll tell you a simple reason.
Which is against the global trends. I mean, if you look at in the developed economies, it's more franchise than managed.
So I'll tell you
what do you think is peculiar about the Indian market today that you have more demand for managed than franchise?
So let's stick to what our expertise or what our highlight is. We are 65% of our portfolio is in tier 2, tier 3, tier 4 cities. Who are these owners? First time? Or other businesses getting into hotels first time? They don't have expertise to run day-to-day operations. They need people like us. What do we do from a simple management contract? And I know I've got my dear friend Arun sitting next to me, so I'm not going to talk about, you know, international brands management contract. But as I said, we evolved. To give you a very simple example, we are the largest sales organization within the hospitality industry. That today we run 18 regional sales offices, which is all our cost. Nothing charged to the hotels. So that's a separate part. Revenue management, we do not charge. You know, headquarters marketing, we do not charge. So I think that's where an owner starts seeing that I'm better off giving that extra couple of percentage points and getting all the benefits and let them run my business. And that's where the demand is still very high. You'll be surprised that in last 12 months, 3 of my franchise contracts have changed into management, because an owner can see the benefit. So for us, it's a little different, and that's what is really working for us.
No, I think it's a very important point Jatin is sharing with the audience here, because for a few points difference, the deliverables you get in a management contract far outweighs the cost savings you would do in a franchise.
Absolutely.
Right?
Just before I let others speak, 23% of offline business in our company is delivered by RSOs to all the hotels on a portfolio basis, and the owners are not charged a penny for it.
Sure.
So that 23% of business is commission-free, coming to an owner as a brand power. Why did it start? Because when we got the first hotel, we did not have the brand strength, and somewhere we said, let's put the cart before the horse and say, how do we deliver to the owners to get them give their hotels to us? So I think that's where we are. Our first hotel, Marine Plaza, still does not have a sales force. We manage their sales. Sure. So that's what I will say.
Great. That's great insight, Jatin. Thank you very much. Arun, over to you. So Marriott, one of the largest hotel companies in the world. wide variety of franchise, predominantly franchise in North America. More than, I think, 80% of the portfolio in North America is franchise. Now we come to, let's say, to India, where it's predominantly managed and very few franchise. What is the mix of managed versus franchise for Marriott in India?
Look, we have, I want to say about 20% franchise. We have about 20% franchise, which is predominantly the ITC hotels, which were there with us for quite a while. So, and all the other operators. I mean, it's interesting that what Jatin mentioned, we actually got 6 franchise hotels as managed last year.
Okay.
So that is also an element which is still working. But predominantly it is managed, and as we see it growing, franchise will have an equal opportunity to grow in India.
But what do you think is the inflection point? It's not happening yet.
Look, we are at the inflection point right now, because if you see all of our economy, mid-scale, select serve brands growing in tier 2, tier 3 cities will be expanding on a franchise model as I see it coming, right? And we have a lot of demand and a lot of discussion going on at this rate. Now, all our luxury brands and the upper upscale premium brands is still showing a lot of growth in a management format. And I think that will be the model for us in this country as we kind of go forward, right? And though there is a lot of plus and minus on both of these things, depends on what is it that you want to achieve with that hotel opening. And if it's ROI, or in some instances ROE, which is written on ego or written on investment. Depends on many different ways of looking at the business, right, and how people look at it. So, but both have absolutely a big potential for us to grow in India. And the inflection point is, I think, now. It is changing now.
Sure. Great. I'm going to come back to you later to look at the pros and cons, franchise versus management. But let's move on to Gaurav. So Gaurav, Chalet Hotels, 8 owned properties. You are getting into franchise. Your hotels have not opened franchise. And plus you're managing 2 of your own hotels as well. So give us a perspective of, let's say, how do you decide which model to go with, whether it's managed, owner-operated, or franchise?
Good afternoon. Thank you, Puneet. From our end, Chalet Hotels has a history of 25 years in the industry and has built a reputation over time to be able to not just own all our assets. We currently own all our assets. In all our ownerships, we've decided, basis on the merit of the location, as to what is the best fit, whether it's a managed hotel, whether it's a franchised hotel, or whether we would like to own it and operate it ourselves. In our case, we have all 3. And unlike what Jatin and Arun said here on the panel, for us, it's actually the other way around. We believe that we've now got capacity within our team. We've built knowledge, infrastructure. We've over time taken benchmarking learnings from our managed hotels, which were our first set of hotels that we had in our portfolio, to be able to learn from them and say, can we start to build capacity within ourselves to be able to run our own hotels and maybe even do franchising. All our new signings in the recent past, other than acquisitions, have been where we've actually gone the franchise route. Whether it's the Taj that we've signed right next to us here at the Delhi airport. We've also recently announced a Hyatt in Navi Mumbai, both of which will be franchised. We operate a Marriott hotel in Navi Mumbai already, a 4 Points, which is also in the franchise segment. So we believe that if you have operational capacity, you have the talent pool that can deliver results equivalent to that of what a managed hotel would be. You have the know-how which has been built over a number of years. Then the arbitrage in the possible savings that you could get out of your fees, which from a profitability perspective is double of what you would see in the top line. And unlike what Arun said of ROE and ROI, for us, ROCE is what defines it. And for us, the return on the capital employed decides where we would go in and invest.
Sure, Gaurav. So I think it's a quite interesting point you're touching on. So you're saying with the operational expertise and the capability Chalet has, even some of the 8 existing managed contracts you have, there's a possibility in the future that you want to manage them yourself.
Well, I wouldn't say that at the moment. I think it's a journey which takes time, and these contracts are pretty watertight.
Sure.
We would like to continue our relationships, but as we sign new hotels, I think we are quite consciously looking at franchising. That is the step that we've taken. We've also looked at our own operating hotels and seen, can we deliver the same results as what our managed hotels are? And we're seeing the results. When we benchmark ourselves, we see that we are able to get better returns, and hence, why not?
Sure. Great. Thank you, Gaurav, for that. Anupam, so generally the rule of thumb is luxury brands, luxury hotels, either they're owned or managed, right? Very rarely you see the very unique cases around the world where a luxury brand would be franchised and operated by the owner. What are your views from a Leela point of view? And congratulations on a very successful IPO as well. How do you see the growth of Leela in India or beyond?
Thank you, Puneet. Good afternoon, and good afternoon to all. So, yes, as you rightly said, it is largely been managed and owned. About 38% of our current number of hotels are owned by us, and they're strongly anchored in key destinations. And all the growth that we are foreseeing in the future comes with a good balance between owned and managed. So that does not go away. And the reasons for that is really quite simple, is that you do need a certain amount of control in the luxury space to be able to stay true to the brand and what it stands for. So I think there's a good balance going forward of owned and managed hotels.
So
for
moving
Leela.
ahead, Leela is planning to own more assets or more growth via management contracts?
Actually, a combination of both, like I said. 2 of the hotels in North India that I can speak of would be owned, and the rest are managed. 4 of them would be managed amongst the new ones that are coming up. So it's a good balance.
All right.
Mumbai, again, owned, both the hotels.
Sure.
So these are all in the public domain now.
And would you ever look at franchise?
Doesn't look likely at the moment.
Sure.
Thank you.
Great.
Yeah.
Souvagya, over to you. Atmosphere Co, experiential brand, focused on luxury. What are your views of, and you own and manage, what are your views on own versus managed?
Thank you, Puneetji. Thank you, BW hoteliers. See, it is basically a luxury brand, and we are managing few hotels in Maldives, and maximum hotels we are managing. And if you'll ask me honestly, we are not getting much difference in the managing the hotel or own hotel. It is almost the same, because even if also it is a own hotel, we have a management company who is managing the hotels. So regarding the management of company, what we have done, we have safeguarding the management company. We are going for 3 aspects. One is the great value, that strong value. We are basically follow the joy of giving. We have empowered all junior colleagues or colleagues to safeguard, even if also to meet any kind of emergency or any kind of challenges, to take the decision themselves. And second one is second aspect is uniqueness. Our property is definitely unique, and experiential or emotionally, we are all the design wise, our properties are all unique properties. And third aspect is, I can tell you, the operation effectiveness, means the management effectiveness. So we are always follow the market, and we learn and we upgrade ourselves, and we also deploy the things in the properly way in the company. So that is the only difference what we feel.
Sure. Thank you very much, Souvagya. Sonica, over back to you. So if you were to looking at an asset today, what would drive your decision to get, whether to get a management contract or a franchise from an owner's perspective?
So, I want to kind of create a paradigm shift over here.
Sure.
So the reason a lot of brands, initially, if you go to many, many years back, they had established themselves in terms of creating a pedigree of great ownership and management, and they wanted to grow really, really fast. Now, what was lacking in this entire thing? It was not that they didn't have expertise, they did not have options, but it was availability of capital. And now I want to break the paradigm shift. What I feel in future, like we saw that most of the brands were working with a big thrust of management, franchise, or perhaps even in lease models as well, people are doing that. There is a lot of availability of organized capital now.
Sure.
Hence, when you've seen this thinning of percentage of owning hotels versus managing and franchise, I think it's going to be a comeback in terms of owning hotels much more. It does give you a great degree of control in terms of what is the end experience I'm giving to the guest, and the overall value chain is quite monitored at your end. The only reason people relented on this was availability of capital. Now we're sitting, we may not be one of the most developed countries of the world, but today in India, we are sitting with a huge amount of organized capital, be it in form of organized funds, maybe Brookfield, for instance, Blackstone. There's so many. And then there are a lot of hotel companies, even boutique ones, they're following the route of consolidating their ownership and going to the public market, maybe in the form of a REIT.
Sure.
The government is also supporting us. Now the REITs are classified as equity. There's more liquidity. There are more people who are wanting to support this asset class, which is hotels. Now, if this support comes in, which is a big transition, there was a time people thought that, hotels, bottom of the line in terms of, the kind of ROC that we get and all the kind of IRRs that the other asset classes can get. But now with the kind of capital that is chasing hotels and the unlocking of value which is happening, I think the paradigm shift is going to come, that the proportions are going to change.
So you think more and more owners would look at owning the assets?
Even hotel companies,
hotel companies
might have a paradigm shift of owning more hotels and managing less and managing even further less franchise hotel. Case in point, what Mr. Dasgupta said. Even, for instance, Brookfield is exactly following that model.
Sure.
Because they are backed with a huge amount of capital to basically give reality to their vision. If today that capital was easily available, I am very sure that most hotel companies would like to go that route. And probably we'll also be following the same route.
Sure.
Right?
No, I think it's a bit of a...
Unfortunately, we've had funds who backed us up.
Yeah.
I mean, from the biggies of the Blackstones of the world and stuff. And I don't think there is any reason that we should follow a proportion of 20-80, 20% owned and 80% franchise or managed. I think for us, it'll be more like a 50-50.
Got it.
Yeah.
No, I think it's a very interesting point you raise, and I'm going to put this to both Jatin and Arun. Being, big brands in India, how do you see what Sonica is saying, that the brand will start from asset light back into investing into assets and owning hotels? What are your views, Jatin, first?
So let me say something which I know Arun probably will say, no, I don't agree with you.
That's okay.
So last few months, we've seen a lot of consolidation fever happening without getting into each in specific. Now, the basic reason is more about distribution, going to the cities where you do not want to put your own human capital for lack of a better word, because they do not fall into your NPV as all the international brands work into. So that consolidation gets you to more footprints where you start coming into backyards of people like Sarovar, Lemon Tree, Fern and all. So that's one part. So I think to Sonica's point, that is consolidation of that nature is different, but from institutions coming together with capital availability, obviously that is definitely changing. When you look at all the listings which have happened in past few years, right from first Embassy REIT to where we are today, I think a lot is changing from that perspective. So it's not about whether operators will have more owned hotels. I don't think so.
Yeah.
I genuinely don't feel that. They probably will put skin in the game because at some point, and I'm saying it very openly, a lot of time ownership come back, you are an owner, who come back to operators say, what is in it for you, except taking the fees away? So a lot of time those questions are there, which are always the long conversations, but I genuinely don't see brands owning more. I think they will still keep on going away from it. It has taken us 15 years to make a decision. Of last 3 years when we wanted to build our hotel, we were sitting on that land bank and we said, now is the time right to build. So those decisions are never taken easily. They always take time. But by the way, on managed and owned, I also want to say one thing. We've experimented this also on the franchise model, that you start with the management contract, give them a flexibility of after 3 years moving into franchise, and we've seen 90% of the time people don't move. They get used to certain value addition and they continue with that.
So Arun, I wanted to ask you about Series by Marriott. So first of all, congratulations. I think it's first time a global brand is kind of has been born in India and been taken globally, right? So if you can share a little bit more insights on the motivation to do Series by Marriott and how it will work. Is it a franchise deal? And what does that mean for Marriott?
Look, actually, we're very excited with the Series by Marriott because it kind of gets us into a segment that we were not very strong in, right? And in that segment, the franchise model actually is the one which really is more efficient to run those hotels. Actually, it's a great thing. It is a brand born in India, and now we have taken it global. And we're going to open more hotels internationally as well as Series by Marriott. And I think by end of this year, we're looking at anywhere between 30 to 50 hotels coming into our network. Now, why is it really exciting for us is it gives us access to markets which currently we don't really get into, right? And the hotels which are sub 100 rooms, right? We would not normally get into because that's the kind of a threshold that we would tell the hotel owners that it will be profitable if you do anything more than that. With this model, with a very straightforward fee structure, very straightforward model, it will give us access to all of those markets and owners and help to play in that mid-scale segment. I think that's the most exciting part of this. And of course, as a brand, it is still growing in traction and we're getting more and more queries. I can see our development team very busy with this for the next 6 months. But I think as we continue to grow this brand and take it globally, right, this will help us to put something on the global arena, which will be another business model for us to kind of look at and expand. Right? So we have now 38 brands, but this one I think has generated a lot more excitement in the company than all the other big brands we have.
Sure. Great. I'm going to stay with you for a minute, Arun, because you're sitting right next to Gaurav, who's a very strong supporter and partner of Marriott from Chalet. So if you were to pitch to Gaurav franchise versus management contract, what would be the pros and cons you would tell Gaurav? Why this should be a franchise property and not managed? These are all trick questions, by the way. I'm not, Bhuvnesh, looking at your script.
No.
Thank you, but...
Great question, Puneet. Look, one of the first ones I would say to Gaurav is, Marriott was one of the first investors with Chalet. Right?
Fair
and
enough.
then let's start the discussion from there. Right? But more than anything, right, Gaurav understands the business of both sides. As they're expanding, and as we spoke, I think, extensively today, the franchise model will expand. with the kind of expertise Chalet has built, right, we would be happy to work with them on a franchise model, because we do have a lot of management contracts, and I believe that we will still get, as they build luxury brands and expand, we will still work with them on many of those. But with the kind of expertise they have, which they have built over the last 25 years, we would be very comfortable and willing to work with Chalet on any of these models. So it's really up to them.
Thank you, Arun.
Gaurav, do you have any comments on that?
No, I think Arun put it beautifully. In our case, I'm going to add a few things. To choose an asset has three basic things that we look at. We look at the opportunity of where the location is. To us, the location is important. After the location, you look at demand drivers in the market, and then you look at the positioning of the hotel that you're building or acquiring. And basis of that, you would franchise, you could do a management agreement, you could go with an X brand or a Y brand. And hence, I think these three things define the path that we have. We're not fixed on whether we want to do only franchising going forward, or whether when it's a luxury hotel in the right market and the positioning is such that it has good competition around and needs the help of the brand and its knowledge that it comes with, then we'll support that. And I think Marriott does that in the partnership that we have. Much to what Arun said, Chalet has its largest portfolio with Marriott, and we've been very proud of that relationship. So I think both of those avenues remain open.
So that's what the reason, Gaurav, was for Taj at the T3 being a franchise property and not managed?
So I think many things came in there. When you look at AeroCity, which is where we are now, Marriott had substantial exposure here. We're at the JW, there's an Aloft next door, there's a St. Regis and a Marriott Marquis coming right next door. So in the same space, the loyalty is going to be spread between the four properties. To put a fifth flag in a 2-kilometer radius, we felt would probably not be the best choice. As we were expanding our talent pool and also our capacity of operations, we felt that why don't we look at alternate opportunities. And we did look at other international brands. We had a more compelling offer with the Taj, and I think they were also willing to invest in us, looking at their, in fact, for Taj, it's their first franchise property that they've done. And to trust Chalet to be able to do that, I think goes a long way in endorsing what Chalet is all about. And the partnership is yet to sort of take birth. The hotel is still under construction. We are hoping for it to come to life sometime in Q4 of next year.
Sure. Good luck with that. Anupam, we were talking earlier about wellness, which is becoming a big vertical, and you are in charge of the wellness for the whole Leela group. So if you want to just share quickly, what is the vision for the wellness vertical for Leela?
So yes, we've got spectacular spas in all our locations, but what was missing was a common, cohesive brand language. And over the years, we've created these wonderful IPs. And so we were looking at Ojasya, which means vitality, and we brought that in during COVID. And we felt that it was a great brand to sort of take to the next level, which was to bring into all of wellness, not just what you put into your body. So we're putting that together. Exciting times ahead for that. So there'll be a lot of the entire philosophy for the vertical is going to change, obviously for the better, and there's going to be a lot more cohesiveness that's going to come in. That's all I can share at the moment, because some of it is under wraps, and we are still ideating and taking things forward as we speak.
So exciting times ahead.
Very exciting times, but this market is going to explode, especially from a wellness perspective. By 2030, as India's wellness spend would be about $81 billion US, growing at a CAGR of about 6.5%. So, and this is only wellness tourism. Sure. So it's going to be big.
Great. So Souvagya, last question. I know we've been majorly above the time now. When you're building hotels, especially for management contracts, how do you get that luxury quotient, the experiential aspect of the Atmosphere core brand, which it's very well known of?
See, basically it is a, as I said, it's a luxury brand. So what we've done to meet all kind of expectation of the owners. So we have segregated the brand in 3 categories. One is in the Ocean, and next one is Atmosphere Hotels and Resorts. Another one is the Colors of Blue. So meet the customer expectation and the ROI. We have segregated the brand classifications. And from the day number 1, we used to try to give the brand standardization to the owners, and also we involve ourselves, we align ourselves in the project stage from the to give him the all kind of concept, all kind of centralized whatever is there. Plus we are very much what you call management contract focused.
Okay.
We are very much management contract focused. So, because it is very becoming easy, because we are managing our own property, it is not the franchise.
So you're controlling in terms of the brand efficiency and the standards and the
And also the centralized, we have a very good L&D team, so we always go for the centralized talent hunt, and we used to give a little bit support to the owners as well as the properties, and also the centralized sales and marketing. Those are the things we always give us. And also reinforce the sustainability, which today's dates owners are very much looking for.
Sure, great.
Thank you.
Well, thank you very much. I think it was quite a candid discussion, some very interesting points, and it's been really a pleasure moderating this. So I think in a nutshell what we are saying is there might be more institutional investors coming in. We might see more brands putting skin in the games to grow their portfolios in India. I think the franchise model has started in India, but there's still time for it to grow. Most of the owners at this stage prefer the management route, and that's how they continue to grow. But as I said, it's early days, and there's a lot of room to grow, and I think there's space for, of course, owned, managed, and franchise, depending on the appetite of the owner, the sophistication of the owner, the location, and again, the long-term goals of the owner. So thank you very much for being part of this lovely discussion this afternoon. Wishing you all the very best. Thank you.
Thank you, Puneet.
Thank you.